Now in today's video, we're going to be going over analyzing two very popular premium income ETFs, talking about AIPI, the Rex AI Equity Premium Income ETF, and of course FEPI, the Rex FANG Innovation Equity Premium Income ETF. Now FEPI has a distribution rate of over 25% and AIPI has a distribution rate of over 34%. So these two ETFs have been pretty popular in the dividend investing space, especially for investors that really want to juice up their portfolio and get a lot more income, potentially at least, compared to lots of other popular premium income ETFs. But the reality is that even though there are some pros when it comes to these style of ETFs, these two specifically, there's also some things investors need to look out for. So like I said, if you guys want to analyze both FEPI and AIPI with me, backtest them both and see how much these ETFs have either made investors or maybe even lost investors. Well, then make sure to stick around, drop a like down below, and let's get right into it. My A to Z dividend investing ebook has helped countless dividend investors get started with their journey. And my custom dividend tracker that I'm constantly using here on the channel has also helped so many investors stay on track and allow them to see their dividend income in real time. Well, today I have another treat for you guys. I'm not only going to offer you my A to Z dividend investing ebook and the custom dividend tracker, but also just for a short limited time, I'm going to be adding in my brand new weekly dividend blueprint ebook to show you how you can get started with weekly dividend ETFs and add this into your investing strategy. This offer is not going to last long, so go ahead and click the first link down below in my description, and you're going to get both ebooks and the custom dividend tracker bundle. But like I said, please act fast because this won't be around for long. Now let's get back into the video. Now first I want to just go through these ETFs, explain to you guys how they work, etc. So for FEPI, the objective is pretty simple: to own big tech names and write cover calls on those names, which is going to offer enhanced income potential. It says the Rex FANG Innovation Equity Premium Income ETF ETFs, the fund investment objectives are capital appreciation and current income. Now AIPI's objective is very similar. The only difference is it's to own AI stocks that might be even more volatile, and then also to write cover calls on those names to also offer enhanced income potential. Now as far as FEPI's holdings go, any ETF that you look into, you need to understand what it's holding on to. And for FEPI, the reason I kind of like this ETF right off the bat is that it offers exposure into big tech names that I personally don't have that much exposure on their own. It says the FANG Innovation Index is equally weighted and includes 15 highly liquid stocks focused on building tomorrow's technology today. The index rebalances monthly and reconstitutes quarterly. Now, some of the names being names like Apple, Tesla, Netflix, Broadcom, Nvidia, Adobe, Microsoft. I mean, names, like I said, a lot of us dividend investors probably don't have that much exposure to, just because a lot of us are focused more on dividend payers, which of course, these are much more growth focused names. Now, as far as AIPI's holdings, it says the BITA AI Leaders Select Index is a rule-based composite index that tracks the market performance of companies listed on recognized exchanges based in the US that are the forefront of AI technologies. The index is rebalanced monthly and reconstituted quarterly also. Now you're going to see some of the same names in FEPI and AIPI, but names like Nvidia makes up a large portion of the overall holdings, and we have CrowdStrike, names like Palantir. Again, much more growth focused, highly volatile names that do have the potential to go up over time, but have the potential to drop pretty quickly too. Now, as far as the distributions go, I'm sure a lot of you guys are curious on the distributions because, again, these ETFs are basically made for premium income. Since inception, FEPI has paid anywhere from $1 plus per share per month down to as low as 82 cents and some change, just as of recently. Now, the crazy thing is with these higher yielding ETFs, or like I like to call them ultra high yielders, even as far as the lower payouts, if you annualize that out, we're still talking a massive yield that's probably going to beat most of the competition. Now, AIPI is going to pay even more of a distribution because, of course, there's more volatility. In the underlying, around $1.50 almost was paid out more or less for several months. And then since then, it's been dropping a little bit along with conditions. But again, you're looking at around 35% targeted yield. Now, just to pull the band-aid off, again, there are some cons when it comes to both these ETFs, even though they pay a boatload of income to investors, including myself, because I personally hold on to some shares of both of them. But FEPI, for example, in the max time frame, just as far as price return goes, is down around $8 since it started trading. This was back in October of 2023. It's down around 15.6%. Now, I know what you're saying, well, give us a total return, add in all the income paid out included, and I'm going to do that in a second here. But just to paint the entire picture as far as price return goes, the ETF is down in the red. Now, AIPI is down even more, down around $11.50 or so, around 21.69%. Now, this is one of the biggest fears for investors that buy into these ultra high yielders. They want to earn a ton of income, which these investments can definitely potentially offer because of the implied volatility of the holdings. But during times of broad-based market declines, some of these ETFs are going to struggle to regain the lost territory because, of course, that cover call overlay is going to cap some upside. But the real way to look at ETFs like these ones that offer so much income potential, even if there is a little bit of erosion as far as price goes, is to look at the total return, which both of these ETFs, as far as total return goes, maxed out since inception. They both are in the green, but not as much as I would have hoped. I mean, FEPI since mid last year has only returned, as far as total return goes, around 4%, and that's even with the massive payouts, where AIPI has actually returned around 12%. Again, this is since around midway last year. Now, zoomed out all the way, FEPI has offered a total return since inception of around 24-25%, which isn't horrible, and AIPI has offered around a 12% total return. So again, I'm not necessarily saying that this is bad or good. I'm just trying to give you guys an entire picture and share with you guys what these premium income ETFs can do, and at least share with you guys what the longer term picture has looked like, at least as of so far, for some of these higher income ETFs. Now that brings me into my last portion of the video. Do I personally hold on to either one of or both these ETFs, and what do I personally think of them? Well, I sort of mentioned I do own some shares of FEPI. I do also own some shares of AIPI. They're relatively small positions in my portfolio. Maybe combined, I have around $5,000 invested into both. Now, the reason I don't have more invested into FEPI and or AIPI is just because their strategy, although I do want some exposure to it because, like I said, I do own some of it, it is just a little bit too volatile. And I do worry because these ETFs do sell covered calls or rate covered calls. I do have a fear that there is going to be the potential for some NAV erosion long term, even with those massive monthly distributions. Now, that being said, if the market gets super red, I do think that these names could be a good buying opportunity to dollar cost average down and sort of make up some lost territory in your own personal shares, or at least that's what I'm personally going to do. But for me specifically in my portfolio, if I'm going to be seeking out premium income ETFs, as a lot of you guys know, it's for the most part going to be lower beta names, index-based covered call ETFs, and or ETFs that just track a little bit lower volatility, even if that means my income generation is going to be slightly lower. All to say that I don't think FEPI or AIPI are bad ETFs whatsoever. They have offered a positive total return, at least as of right now, since inception, and they are doing basically what they're made to do. But more importantly, I do have a question for you guys down below. When it comes to FEPI or AIPI, do you personally own either one of these names in your portfolio, and what do you think of them as of so far? If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.